that looking at how the market is, I think it is good to understand when to do what. Okay, when to do what. For those of you who are trading and you were using. Okay, let me just quickly. If you were trading already, if at this moment you are already in a trade, you are in a trade, and you are using our martingale strategy the way I've been teaching you, I shouldn't expect you to be in any panic. You should be happy at the moment, because if your coins, I should expect that all your position is, most of them are bought, if not all of them. All of them are bought, if not most of them are bought. So people opened up 5 positions, 6 positions, 7 positions. If your capital could allow you to put all positions, at this moment, you should be able. I believe that most of your assets have bought all the positions, and all you need is to simply be happy. Now, for people to just wait and the market go up, for people who their coins are still going down, you have to just open more positions. But this time around, you don't have to worry about, okay, I can enter the money. You do what we call replenishment. Okay, so you just open more positions. So this is what I'm trying to say. When the market is down and you have set, if your settings are good, even if you enter the coin, at $10. So you open the first position, first buying amount, you enter this coin at $10, and now it has gone down to $5. You don't have to worry. You just open more position and the robot buy more coins here, so that you do what we call the DCA, the dollar cost averaging. You reduce the negative or the floating loss to a smaller percentage, hence reducing the time you will have to wait for that coin to come out of that. Now, this is something that I will talk about until someone get it clear. So today, I want to highlight on a strategy mode application. Strategy mode. Strategy mode. Strategy mode. How to determine the strategy mode you are supposed to be in when you are trading. Okay, so we said we have 3 strategies. We have 3 strategy modes in our Royalq. We have mode number 1, which is the steady. Okay, let's start with radical. We have mode number 1, it is radical. Mode number 2 is conservative. Mode number 3 is steady. Okay, we have radical, conservative, and steady. So when you are trying to set up your Royalq, you are trying to instruct it to go and buy, it is important to know which mode I'm supposed to use, basing at the market, looking at the general market, looking at the market of that coin. Okay, you look at the coin of the market of the coin, and you look at the general market. So for example, the general market at this time, it is bearish. So you can find that some coins, a few, are up. But I'm trying to look for the one which is up. Most of the coins are down. Most of the coins are what? Are down. Are you seeing that? Most of the assets are down. So for people who want to buy, this is a good timing. Look at that. Look at that. Most of the coins are down. All the top 100, they are down. So before you cry floating loss, you know. But this, we can see it that is because Bitcoin is really down, and the market cap has gone down. So my question is, you should be in position. You should be in position before entering a coin. So you've come here and you have selected a random coin. You want to trade. I told you can decide to trade the top. You say for me, I'll be trading top 10. It's another one says me, I'll be trading top 20 coins, top 50 coins. Okay. If you can keep yourself in the top 100, that is the best. The top 100 coins, these ones that I'm showing you, the top 100 coins. So you should be able to know which strategy mode I should use at which time. What is the best strategy mode to use when the market is going down? And what is the best strategy mode to use when the market is going up? Or we call it the risk type. Let's use the term risk type. What is the risk type? Are you supposed to be radical? Are you supposed to be conservative? Are you supposed to be in steady mode? All these risk types, they have different market situations or condition that they work perfect in. For example, a radical risk type, right? Let's just look at it. Radical is very good when the market is bullish, when the market is moving up, when the price of the asset is going up. That is when it is good to be in a radical. All right? Can you give me a one if that is clear? When do we apply the radical? We apply the radical when, number one, the market is bullish. Then we can be radical in our approach. We can be radical in our approach. But when the market is in the opposite direction, when the market is bearish, you need to be conservative. When the market is bearish, you need to be conservative. Are we together? Let me just put my camera because I want to see you. I'll be removing it. Okay. When the market is bearish, we need to be conservative. And when the market is bullish, we need to be radical. So this is what I'm trying to mean. This is what I'm trying to mean. Let's first of all go back here on our strategy modes. This risk type. What is the risk type you are supposed to be in? Are you seeing this on top here? This one here. Are you supposed to be steady? Do you know how to determine which risk type you are supposed to use? That is my topic this evening. How to determine the risk type. So we have three risk types. We have radical, we have conservative, and we have the steady. When do we use the radical? This is what I'm saying. if you look at a coin, you do what we call a background check. Back check that coin before you enter it. How do you back check the coin? You can do that from Royalq, or you can use TradingView. So you have selected your coin from the top 100. These are all assets here. So you come and select this coin, an example of XRP for Solana. Let's select Solana. You come and select Solana. Okay. You come and select Solana. Now come in your Royalq. The back checking can be done within here. You can do it from Royalq, or you can utilize TradingView. Now, how do you back check? Back checking is how you are going to determine the risk type you should use. Back checking the coin, how it has been behaving in the past. What has been the biggest percentage it has gone down? Are we together? Because trading is about using, checking the previous data to determine the future. The past to give you a picture of the future. So when you check, you back check this coin and you notice, okay, this coin has been, when it drops in, for example, a 1 day interval, looking at the market in 1 day interval, when it drops, it has been going, right now it is at the price, when we look at the this Solana we have chosen, it is trading at $113. Okay. But if we back check, we want to see which one was the previous lowest price it went below. It went to. So we can see, we can find it at 100 and we can find it at $98 in the past. This is why I prefer using TradingView, because it will give you even the past. You are able to add, and you can do the measurements on the TradingView. Some of you, when I mentioned these apps, it's like you just enjoy connecting on Zoom. Go and download these apps and practice them. That's how you are going to learn. Are you seeing that? That's how you get to learn. So if the TradingView gives you a better picture, download it and have it on your phone. Yes, you may not understand everything in the beginning in the application, but have it and just get familiar with it. This is what I'm talking about. Okay, I will share training that talks about just getting, that talks about TradingView in particular. So I come down here on my TradingView. I'm going to come and just search for the coin. I want to measure Solana. So we get Solana, and we want to measure how has Solana been behaving in the past. The lowest it has gone on, I'm going to look at it in a 1 day time interval. 1 day time interval. Now we do a back check. We are going to do a back check before we choose whether we should go in with radical. We should be radical, or we should be conservative, or we should be steady. So this is what I'm going to do. I'm going to check it. So I'm going to check Solana. I want to see the lowest it has gone in the past from the price it is on right now. So I think that Solana has gone, I think this is too far. I've gone too far. I can use this. Yeah, I can use this. Already this coin is down. Looking at where it has come from, it is down. This is a very big downward trend. So the coin is already down. If I had found it when it is pumping, can you notice this? That this coin is down. Hmm? Can you notice this? That this coin is down. Who can notice that this coin is down? It has gone from this point. It is here now. Are you seeing that the coin is down? Hmm? Can you give me a one? Can you see that this coin is down? Hmm? Can you see that this coin is down? Because when we look at it from where it is to where it has come from, the market tells us that the coin is down, generally down. In as much as it has been moving during those down, it has been moving, it has been making movements, but generally it is down. So when the coin is down, what do we expect? It means when it comes from here, it is going to go up. So it may not go down again so much, because already we see that when we look at it generally, there has been more buyer sellers. People have sold it off in the past quite a number of days. Okay? People have been selling it off. So it's been a downward trend. Now, this downward trend, this is what we want to know. If we are going to determine whether you should be radical with a coin, we realize when we check it, in as much as the general market is bearish, it means this coin, if we are going to be conservative, it may not enter our money, all of it. It may not enter the money in the market. It means the profit we shall make will be small if we use, if we go in conservatively, so conservatively. So when I look at Solana, I see that if it goes down, I'm trying to back check it from the point where it is. So let's take this sample space and measure here. If it goes down from the price where it is, this is the price where it is. If it goes down, it means Solana will go to, it will go down by negative 41%. Now that is quite big for Solana. Are you seeing that this will mean, let me try to expand these figures for you. I want you to look at these black details that they have put here. Are you seeing that they are telling us that if Solana goes back to the point, this point here that I've measured, it simply means 40% of the money has gone out of it. And it means people will have to remove $24 billion out of it. This is why I need you to have a trading view, because it is so detailed. It gives you a big picture of the opportunity, the business, the market, even before you get in. Okay? So they are telling us that Solana, it will have to lose, people will have to sell off assets worth $24 billion for it to go back to that price, which is difficult, for it to make a negative 41%. So if I am going to be conservative in Solana, if I'm trading Solana and I go in conservatively, I am most likely not to, my money won't get into the market. My capital, the robot won't enter into the market, because the market, it will be hard for it to go from here down to this point. Are you getting what I'm saying? Can you give me a yes if that is clear? we are trying to determine when am I supposed to be conservative. Can you give me a yes if that is clear? So this tells me that if I want my money to go in the market, I am not going to be conservative with Solana. Looking at, I've checked the one when it last went down, the higher, the lower, the biggest from the current price. And that is the feedback I've seen. That is what I have seen. So it means I won't be conservative with Solana. If I am too cowardly, I will be steady. But looking at the type of coin I'm looking at, the coin is big. It is a big project. It means this project, it has the capacity to go up anytime from here. So I'm going to be radical. I'll be radical in Solana. Unless if I have my capital, unless you don't have enough capital. If your capital is small, I'm talking about $100, $200, and you want your capital not to go into, that's when you can be conservative. Okay? This is where the concept comes out from. I told you these risk types, they differ. What makes them different is the percentage from the time you enter the market. What is going to be the percentage the market will go down before it go back to overtake the point where you entered the market from? Are we together now? So from the point where you entered the market here, what is the percentage that you think the market will go down? We are trying to calculate what percentage should we give the robot that after we look at this coin, the market will go down with negative, maybe negative 10%, maybe negative 20%, maybe negative 30%. This percentage is what determines the risk type that you are going to use. So if you are looking at the market, that if after doing the back checking, how do you get this percentage? Back checking the asset. So after looking at the percentage, I've showed you how you get it. Look at the coin from the point where you want to enter it from the price where it is. When you go back maybe 5 weeks ago, if you want to look at the market in 1 week interval, when you go back maybe 2 months ago, what was the lowest point it has ever touched? And then measure the difference between that point and the point of entry. That is going to determine the risk type you are going to use. If the coin in the past, it has gone down from the price where you were looking at it from, it has gone down with negative 50% within a week. It means after entering that coin, it can happen that the coin can go down with negative 50. So you are going to determine, you are going to go and check. The other day we were doing calculations, we are going to repeat it again. We were looking at what is the percentage that Royalq is providing, the percentage in Radical. So we saw that Radical, it was around, if I'm not mistaken, if we are able to remember properly, it was around 35. Is there anyone who remember those percentages? Let me see if I checked them. If I got them somewhere. Can someone remind me, those who take notes in the chair sessions? If you take notes, you should be able to have them. What was the percentage, the drop in radical, in conservative, and in steady mode? Is there anyone who remember that? Does anybody remember that? Does anybody remember that? Let me just give you how you calculate it. Okay? So when you tap on Let's go back here. When you tap on, so we are in steady mode now. We are in steady type. So you are determining that percentage by adding this. When you tap on margin configuration here, I want you to come and add this percentage here. This one. Add it. The total is going to be the drop, total drop. Okay? If you add that percentage. So we said if it is radical, I've written those things down. Yes, I think they're here. If it is radical, it is a negative 30.5. Meaning the market will drop. You are looking at the market to drop up to negative 30. That is you being radical. Are we together? Then, with conservative, you are looking at the market to drop from the point of entry, to drop up to 40. That is what? That is we are in what? We are in conservative. Conservative, we are looking at the market to drop up to 63%. 63.5%. Are we together now? 63.5%. That is being conservative. And then in steady, you are looking at the market to drop up to negative, up to negative 45.2. So, friends, these are shock absorbers. That in case like what has happened, you enter the coin and it has gone down, you will still be safe, even if the coin dropped up to negative 40. So for my friends who entered the coins and so far, after you entered, the coin has dropped, maybe you were in conservative, you can even go and check because those ones are the same. If you were in conservative, this is steady. It is 40 what? 40 what? This is 45%. So if you enter the certain coin in steady mode and the coin has dropped so far with negative 3%, 4%, 4.5%, and it has bought for you these 3 margin calls, but it has continued to drop down, there is no problem. Just go and open position number 5, number 4, put another margin call. If you have more money, put another one, put another one. The robot will buy well, and it is going to do the DCA, the dollar cost averaging, so that it reduces the negative you are in, and that is going to be very good because you are not going to take long to come out of that asset. Is anyone getting what I'm saying? 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 So if you enter the coin, maybe you had put some small capital, you have put 2 margin calls in steady mode. The robot has bought. Now that the coin has dropped, the coin dropped with negative 3.5, the robot entered another position. Entered another one, another position, but it has continued going down. Okay? Just opening, just come on your trade setting. Okay? On your trade setting. Let me see if we can, on your trade setting, in that coin, So when you come on that coin, for example, you were in Aave, it is already running. So all you have to do is to come and change. You come and change. When you open the coin, you will see trade setting. Come and change. If you had 2 margin calls, where there is 2, change and add another margin call, maybe 3. You've added more money there. You've added more money on your capital. Just add another margin call and the robot is going to buy it, and bam, you are going to be protected against the floating loss. Are we together now? So that is the easiest way to back check the coin to determine whether you should be radical, whether you should be conservative, or whether you should be in steady mode. When the market is going up, be radical. When the market is going down, when you enter a coin that is pumping the way we are, let's go back to our trading view. Let me ask you a question. We are in Ava. You want to trade Ava from this point here. Okay? This is the point you want to trade Ava. This one here where I've put the line. Are we together? When the price of Ava has pumped, the price went from this point here, and it rose. It rose from here. It went up. The price of Ava went up like this. You want to enter this coin from this point here. My question is, are you supposed to be radical? Are you supposed to be conservative, or you are supposed to be steady? Some answer in the chat room. You want to enter, when you look at the coin you want to buy, it is up here. Okay? It has pumped. When you back check it, the candles are telling you that the coin has not been down, has not been up. It has just gone up. From the previous history, the coin is telling you that I have not been up, I have just gone up. So, with that coin, are you supposed to use steady, conservative, or radical? If you want to enter it from there, when you back check it, you realize that all this time, it has not been playing in this zone where it had gone. You see? It has not been playing in this zone. So it just touched this zone. What do I mean with the zone? Look at this coin here. Are you seeing that all this side, it is empty? The coin has not been there. It has just gone up. So are you supposed to be radical, conservative, or steady? Some answer in the chat room. Okay, people are sleeping. Today, I'm not feeling very well. So if you want me to motivate you to type, I'm not going to motivate you. If you want me to motivate you to type, I'm not going to motivate you. I'm not going to motivate you. I'm asking you, the coin is up. You want to enter it. Are you supposed to be conservative? Are you supposed to be radical? Are you supposed to be steady? Someone's in the chat. Dr. Jeros is saying radical. Hubert says steady. Radical. How can you be radical in a pumping coin? You are dozing. How can you be radical in a pumping coin? Already the coin is telling you that I am at my peak. The coin is showing you that where I am, it has not been a place I'm used to. This place where I have gone, where you want to enter me from, the chances of me continuing to go up are low. So if you are going to be radical here, it means you are removing your guards. If the coin changes the way it changed and it goes down, by the time it reaches here, your man has already entered the market and you will be floating from there going forward. You'll be floating in that coin up to here. So your money finished at this point and you are floating from here. You have to wait for it to go back and touch. I don't know if you are getting what I'm saying. If the coin has pumped, you look at it, you want to enter it from the point of pumping. It simply means it has high chances of going down. So you need to be conservative in your approach to it. You need to give a big drop here. You need to be conservative. Are we together now? If the market you are entering is bullish, be conservative. If it is bearish, be radical. At premium price, be conservative. The price is high. There are a lot of buyers in the market. Be conservative. When the buyers are when the sellers are many in the market, be radical. We close our class. When there are so many, when the market is down, be radical. When the price is high, be conservative because it can easily go down. Give me a yes if that is clear. Are we together? Give me a yes if that is clear. So you are going to enter a pumping coin and you are radical, and after a few minutes, after a little percentage, it continue going down. So that is it. All right. Do we have any questions? Because I am done. Do we have any questions? Because I am done. You can unmute your microphone and ask. Richard asks, when are we using steady? We use a steady when the market is not giving proper direction. It's not showing that it is down or up. Okay, that's when we utilize a steady. We call them consolidation stages. So when the prices are consolidating, when buyers are buying, when people are collecting, the market is not up, the market is not down. That's when we utilize a steady. Have I answered you? When you look at the coin, it has been at a certain price, like look at this one. You see this point here? Before the market made, so it came, let me show you, Richard. Let me show you. Let me show you. We close our call. Take an example. The market came up, came from down, came from up, downward at this point. Then It started consolidating at this point, trying to gather momentum to take an upward trend. So at this point here, this is where you would apply steady, because you are not sure whether after that it is continuing to go down or it is going to go up. But from a point where you see the market is clearly up, okay, it is clearly up, you go in with conservative. Like here, this is peak point, because it moved from down here and it made an upward. So when you are entering it from here, you are supposed to be conservative. When you are entering it from here, you can be radical or steady. Any of those two. Have I answered you? Richard, have I answered you? When you are entering the market, again from here, be conservative. When you are entering from here, be radical. I hope that is clear. So I think we are going to start. I'll be sending you. I'll start sharing signals of top 100 coins in the future there, because I see some of you, the things are still disturbing you. We'll start sending signals from the top 100 coins. All right, friends, no more questions. I think no more questions. Thank you, thank you. Let me wish you a good night. Have a blessed night. We meet tomorrow, 8 a.m. I'll give the mic to our co-host, Dr. Jairus. All right.
Thank you so much. Thank you for the wonderful teaching. I'm sure